had very strong PMIs, composite service PMIs from the EU, and particularly the UK this morning as well. The UK one was at a record high. 1998 was the first time they started running this market services PMI data. It came in at 62.9, much higher than expected. I say a record high. So positive vibes around sterling. Sterling's had a run up this morning. Dollar came back a wee bit overnight, but it's done that last couple of weeks ahead of some key data. But the PMIs are relatively positive. Remember, last Friday the PCE was much stronger than expected. So this story about the inflation outlook and the prospects for inflation continue to swirl. So we've got one side saying this is only transitory, led by the central banks. They keep their mantra there. That hasn't moved on really. And then there's other analysts and opinion economists out there in the marketplace saying this is traditionally inflation can be sticky. However, whichever way you measure it. Remember, the PCE is the Fed's preferred measure of inflation in the economy. So again, so some people are saying this is not just going to be transitory; it's going to stick. Real prices are going up. People are seeing real hikes in things like food. We've also had this massive commodity rally that continues to move forward. So only time will tell where it falls. But expectations are potentially the pressure of will come on the Fed quicker than the Fed are saying at the moment. So the next two key meetings from the ECB and the Fed, the ECB meet on the 10th of June, and the Fed is the 15th, 16th of June. Absolutely key for the rest of how the recovery goes in this post-pandemic age we're getting into. And today and tomorrow, obviously, two key events all around jobs and data. Today we got the ADP number, the private payrolls expected 650,000 here on my calendar, 742,000 last time. I've seen numbers are a little bit lower than that and a little bit higher than that, 675,000 as well. So see what ADP comes in at. 664, I think, was the Reuters poll earlier in the week. I was looking at continuing claims. Remember what happened last week? We had a beat in the initial claims, but the 4-week average went up and the long-term unemployment rate went up, which is a bit of a shock to the system. So expected the initial claims today down to 400,000 or 395,000. And the continuing claims dipping to 3.61 million. That's out 15 minutes after the ADP. So it's ADP first. Then we got the claims numbers. And then later on in the day, we've got the market services PMI and the ISM services PMI as well. The latter one there is the most important, and that's expected to tick up to 63. The services PMI data from the ISM, so watch that later on also. 62.7 last time, 63 last time. So if it's in line with how the other PMIs globally have been ratcheting up, that could be quite a big number later. Obviously, any dip in that will be questioned as we go forward. We've also got the official weekly oil inventories. It's been a big week for oil also. Given that we've lost Monday, so they're here on Thursday rather than Wednesday. And private inventories yesterday came in line with expectations. So see how that goes. We obviously had the OPEC Plus meeting where they talked about in line with expectations again, cranking up output a wee bit for June and July, July in particular. If it's going to go further from there into the second quarter, we shall see. So see what comes of all of that data as we approach the big one, which is NFP tomorrow. Andrew will be live tomorrow for NFP. Headline number, again, expected to come in around 653 is the Bloomberg poll average. The Reuters poll average was around about 645. Here on our calendar here is at 664 here for non-farm payroll tomorrow. Unemployment expected to come down back under 6% to 5.9% from 6.1% last time. And the earnings expected to tick up to 0.2 of 1% So again, lots of data will have a big impact on where we go from here from a directional point of view when it comes to the next round of these key central bank meetings in a minute. And I've lost myself. Where are we? Here we are. So there we go. Let's have a look. What's going on here? Okay. Right. Where are we? 10 minutes to the day. So, as usual, any questions anybody's got, any markets you want to have a look at, please let me know. So, let's bring up the markets. I need to look at me back there as well. Let's, in a minute, what we're doing. Move that down there. There we are. There we are. Let's get rid of that caption, shall we? And just move that off for now. Right. Okay. So we have now here, this is the gold chart on the 1 hour time frame. I know many of you are gold traders. We've had up and down a couple of days. We went to 1916 up here on Tuesday, yesterday, and then dipped down. Yesterday we went to 1906. 1909, and now we've moved back down again this morning under 1900, and that's trending lower currently on that 1 hour time frame. So see where gold goes later. Euro pivoting through 122. Really, we're at 122.85. Says the dollar's sort of ground higher over the last 24 hours. So again, see where that goes. Oh, really, markets are really in sort of as you can see here, just sort of up and down, up and down, up and down, basically, but not really going anywhere. See how flat that 200-hour moving average is. Just waiting for the key data today and tomorrow. In this shortened week ahead of non-farm payroll tomorrow. Cable just can't hold 142. It's really on the higher time frame. We've got the daily time frame here for cable. You can see we're ratcheting between 141 down here and 142 up here. We can't break and hold over 142 for any length of time. Let's put that 142 line in there. You can see that's our sort of top level here. And we're supported down here around 141. You see that's been going on. If I put in the period separators on here, I'm on a different workstation. So there we go. So the second half of May and the beginning this first few days of June were very much channel bound between this 141 low and the 142 high. We need to really try and close over 142 if cable's going to go higher. Dollar yen, on the other hand, we went to 110, didn't we? 110 earlier last week. We can't. And let's just put that separate. So get me some idea of where I am. There we go. We can't get and hold over 110, and we're again another one that's pivoting through 109, but we're over 109 now quite significantly. And 150. If I just put 109.50 becomes our support here. This week, if we go up to the daily time frame, see that 109.50, we sort of moved off that into the month end, and that's our support so far into June. Obviously, early days into June, but we're lifting up the key 50-day moving average there at 108.80 as provide our support on a daily basis. Let me just see where we are when it comes to. See if there's any questions from our colleagues on Facebook. Our friends on Facebook. Let's have a look. What time range you look at, says David. David, I tend to default to the daily time frame. The time frame, David, is really all about you. You know, you trade the time frame that you're actually trading. Obviously, you need to watch what's going on above that time frame and below that time frame. But the time frame that you trade is the one that fits your personality and fits your lifestyle. So when you can look at the charts or the screen or however you do it, whether it's a 1 minute chart or an end of day chart, you've got to fit your personality first and foremost. The rest of the stuff falls out of it, basically. So this chart here, for instance, this is dollar yen on the daily. It looks like that. If we go down to the minute chart, it looks like that, but it's exactly the same indicators, and it can be used in exactly the same way on a 1 minute chart as they can on a 1 hour daily chart, as we've just seen. Here on the 1 minute, you see it sort of moving up a bit, and that 50-minute, as it is, that moving average there, that blue line is the 50-minute moving average. Now, that's, again, sort of provided support, hasn't it, since 2:30 this afternoon. Big gap down. That's what you can get with these shorter time frames, gaps in the time frame. So again, you've got to be careful of that. So really, for me, my default is the daily time frame, David, and everything else falls from that. Obviously, that creates some sort of support and resistance areas on an end of day basis. When markets have closed up. Davina PMs. I don't know what that means. Divine. What do you mean by that? Okay. Where are we? Right, 3 minutes to the data. So let's have a look. Let's move this up to a bit more of even a 5-minute time frame here. This is yen on the time frame. Dollars moved down and moved up. Again, big gap. You can get these gaps. So, I tend to, let's have a look at this. Put back to the 1 hour chart. So biased upwards here. Dollar yen. Euro sort of on the opposite direction, biasing down. We just had a look at cable. That's biased upwards today. Where are we? There we are. There's our 142. That's a bit too high, but sort of ticking up with that strong data this morning. So see how the data comes out. Biggest mover for the dollar over the last couple of days has been against the Kiwi. The Kiwi here was up at 72.85 earlier in the week, and we've started the month off indeed. And we've sort of just legged down. So down, retrace, a bit of a congestion zone, and down again today. So we're at 72.01. So testing that big fat round number there, 72 for Kiwi. And that's been trending lower quite nicely. The Aussie hasn't been as weak, but it's been following its Antipodean cousin down, 77.12 at the moment, 77.80 earlier in the week. So let's have a look at the data. ADP is just coming across the screens now. Emenka, good afternoon to you. Hope you're well. Anything you want to have a look at, my friend, please stick it in the box. We'll have a look at it together. It's lots of data to come today. So let's just refresh my screen here. ADP, actually, it's not quite yet out and across the boards. But interestingly, this morning, that strong, and quite often see this strong candle we had this morning here for the sterling had preempted the PMI data as well. So obviously there's potential insiders get a bit of data ahead of the main pack of the business. But say we'd gone down but up on that data. So dipped this morning, then back up on the actual data release. And I say the higher time frame still remains sort of bid, but certainly consolidating between those two key levels. Certainly for sterling against the US dollar cable market. So there we are. Anybody wants to talk? You're all very quiet today. Is it because it's Thursday? My friend, I can't. Good afternoon, my friend in Egypt. Hope you're well. You can understand what I'm saying. I trust you can. Let's have a look. So we got, looks like the data may be strong, and indeed it is. Big blockbuster break for ADP. Private payrolls, they're playing basically a month catch-up. They've come in at 978,000, so that's a strong number for private employment in the United States for the month of May. Obviously, it's the April numbers, but that's a big beat. Nearly 50% over expectations. Expectations were 650,000. It's coming in at 978,000. Now then, everybody's going to jump ahead and say, well, that's going to be a big, massive beat for NFP tomorrow. The correlation between the private payrolls from ADP and the government NFP number tomorrow isn't as strong as it used to be, but certainly it's very, very supportive. So 978,000 ADP private payrolls for May has come in. So it'll be interesting to see in about 15 minutes' time if the weekly unemployment claims continue this decline. The initial claims could plummet quite significantly under 400,000. That show that these jobs are being filled. The issue continues to be the quality of the jobs that people are taking. There's also a lot of talk in in the United States. We're just coming to they've come to the end of the school year in the United States, and there's a lot of those that are seeing the growth in the second half of the year to be very positive. See, there's still a lot of parents, whether that's males or females, still at home. We're still with children that haven't gone back to school in full time. We've come to the end of the school year in the United States, so that's going to sort of smooth off over the summertime. So there could be a significant step up in the September, October data as well. And again, that's what the bulls are talking about, that there's people that do want to get back to employment, do want to get back to work, but they're still restricted by children being at home and schools being quite a lot of schools still being closed, even though obviously many schools and economies and states are opening up very aggressively in the United States as the vaccination rolls out. One of the issues the president talked about yesterday was this idea of trying to get the vaccination rate up. There's lots of resistance, particularly obviously in all parts of the world, but particularly in the United States, and particularly in the southern states of the United States, which one is tend to be strong Republican holding states, and two, some of them didn't get hit as badly as some of the northern states, and so they had much more of an outside sort of economy where people are outside more. So the whole mask wearing, the vaccination rates, all a bit questionable in some of those key southern states. So all sorts of incentives the government are coming up with, from things on free beer to free childcare, all that sort of thing. Obviously, free childcare addresses this issue about people going back to work and parents going back to work. So we'll see how all that pans out. But anyway, the data today continues to be strong, really across the world. So we've had those strong PMIs this morning from the Euro area and in the individual Euro countries and the UK, and that big ADP number now. So let's have a look. So cable is moving down at 141.78. Euro might have perked a bit more. Euro's drifting lower. We pushed to a day low at 121.70 zone. Still drifting lower. That's a 15-minute time frame. That's a 1 hour time frame. So yeah. So let's put the period setters on there. There we go. So that's our week. That's our week. So Friday's low was all the way down there at 121.30. So still a fair way to go before we get to that. Data percent, absolutely. Yeah, it was very strong data, much higher than expected, 9, 7, 8,000, very, very positive. So that, you could argue, well, that argues to the bulls that the market, the economy may be coming back quicker than the Fed is still trying to talk. Remember, the Fed is still talking about inflation only being temporary, but there are some real life issues that suggest that's not necessarily the case, and there's a big disparity between the notions going on. So shorted Euro USD this morning, looking to hold until 121. Well, that's again, get closer. I don't know what time frame you're trading, but 121 sits way off this chart. This is the 1 hour chart, and it's again, I don't know how you've taken your trade, but the best of luck. So here, the 1 hour, the parabolic SAR there is negative, so it's, we're under the 50 hour, we're under the 200 hour, we're under the 20 hour, so it's drifting lower. But really, to move lower, you'd want to break through. Where's my little line there? You want to break through yesterday's not closing low, but the low on the hourly candle there at 121.72. We've tested it already, as this data's come out. The absolute low yesterday was down there at 121.62. Still quite a long way from 121, my friend. Remember the ATR, ATR here typically only moves about 10 pips. Remember what the ATR is. It's an absolute number. So it's the average true range. So how far this particular asset travels. And in an hour, it typically travels 10 pips. We go to the daily time frame, and the Euro typically travels about 60 pips. So he's still got quite a way to go to get to your 121 target. But 120.97 is where the 50-day moving average sits. So yeah, I can see where perhaps you've got that target down there at 121. My analysis, Detrosans, he's saying, sorry, get closer, saying my analysis on H1 time frame. Okay, well that's quite a run. And again, coming back to the ATR, to get you to 121, my friend, that's a big old move. So if the ATR, think about this as well. So if the ATR is only 10 pips for an hour, you've got 60 odd pips to go, or 77 pips to go. So you've got a long potential wait for that. So have you got the patience to do that? But that's no reason for that. But on this particular setup here, you can see on the chart, that would have triggered short and a weak short there at 5 o'clock this morning. So that's gone short there. And it's trending lower and hasn't moved back up. So you might have been, if you've been trailing your stop loss down, you would have probably been stopped out with that big spike high that we had when the PMIs came out earlier. Actually, that wasn't the PMIs, was it? I don't know what caused that one, but that was the 2 o'clock. That's the 1 till 2 candle. So that would have perhaps taken you out if you'd been trailing your stop loss down. But now it's continued to move down again. So the best of luck with that, my friend. I don't know how you're taking that target. I don't know where you got that target from, but if you want to share it with us all, that'd be good. If not, I would appreciate that. So big data so far. Let's see what these claims numbers are like in about 5 minutes. If let me just go back to Facebook. There's nobody on Facebook asking any questions. So it was a time frame, that question that David asked earlier. Where's my screen? There we go. So let's have a look what else is going on. We looked at gold. I was talking about oil earlier, wasn't I? And I find it here. Here we are. We were over $69 this morning. Let's put that line on there. Big rally we've had in the oil market. It continues to remain bid. That's around there. We are 69.09. It's not exactly $69, but you can see if we got the daily time frame, see what a strong rally we've had from this dip down here a couple of weeks ago when there was the big concern, these 3 red candles here. There's a big concern that the Iranian sanctions were going to get lifted. There was Iranian supply was going to come back into the marketplace. There was positive vibes around the Iranian nuclear deal with the key 5 countries. That was all seeming very, very positive, all happening at the same time. So we had this bit of a panic in the oil market for 3 days as we crashed down here from over 66.50, 68.80, 66.80, I think it was, wasn't it? Yeah, there we go. Just shy of $67 on the first day. And then we crashed all the way down here through the 50-day moving average to 61.50. We recovered within 2 days, so that's positive as well, recovering more than 80% of that 3-day collapse. And then since then, here, that candle there, where we went back over the 20-day moving average moved back up. On the 24th of May, we've moved back through that resistance and continue to track higher. And today we've been over 69. So the trend higher in oil continues. So the worry about the Iranian situation has gone away, about production coming back. There's been stall talks in the nuclear progress. So again, that's held the bid on oil. And then OPEC yesterday, was it yesterday or the day before? OPEC this week basically have said they are going to increase production in July, but that was anticipated. So we're moving forward. The Russians said this morning they may look to up output quite significantly, so that might cool things. But oil remains bid, and most of the other commodity markets remain bid. We saw that move down in oil, in gold earlier, didn't we? So there we go. 5 minutes of initial claim. So that was oil market. Gold, as moving down today as the dollar's picked up a wee bit, but crucially under the 1900 level. Let me put this on this chart. 1900. There we are. Can you see that green light? There we are. That's 1900. And continue to track lower. And interestingly, gold has broken through, breached the 200-hour moving average. So closed under it in the last hour. Excuse me. And moving lower. Oh, Rain. Hello, my friend. I'm very well, thank you. Apart from some lunch seems to have got stuck in the old gullet. So pound CAD on the 1 hour, says Rain. So let's have a look at pound CAD. Let's find it over here. Pound Swissy, pound CAD. Where's pound CAD? Go on, pound CAD. Actually, file, new chart. Let's do it this way. New chart. Pound CAD. I can't remember. Pound CAD. Put template on. Let's put the one we've been playing with. That's that one. So pound CAD 1 hour chart. Here we are. That went long this morning, my friend. Here on the 1 hour chart, Rain. Let's just go up to the other charts. You can see clearly. Well, I hope you can see clearly what's happened now. We were moving lower, retraced sideways, consolidation, moved lower. Didn't want to go lower. We didn't go lower than the previous low here at the beginning of the month, beginning of June. Let's put the period separators on here so we can see where we are from a day point of view. So here's Thursday, big strong move up today, but we'd moved down Tuesday. The low Wednesday was higher than the low Tuesday, so that's relatively positive. We need, as we went sideways, retraced. Sideways again this morning, and then the break higher, or the last break higher, was this morning there at 11 o'clock, that line there. And then 11 till 12, we broke over the 50-hour moving average, the blue line, and then the 200-hour moving average was breached here in that candle. So big, strong candle. And again, see here, what we've done here with this candle is closed above the high from yesterday. So the low from yesterday wasn't as low as the low on Tuesday, and high today has so far got higher than the high of yesterday, Wednesday. So we're moving up. So momentum takes us higher. So moving down currently as I speak, but that's still bid. It's still above the 5, the 9, and the 20 period moving average, which is down here. Higher time frame though, the 4-hour time frame will be a wee bit different. There's the big candle in this time frame that finished at 1400 hours. So that's suddenly turned around here. So that's a big, having moved down quite aggressively, then gone sideways. The 4 hours gone long as well at 2 o'clock this afternoon, an hour or so ago, an hour and a half ago. But the 4 hour then has resistance up here. So that's your intraday initial resistance on the 4 hour time frame. So it's there. So if we go back to your 1 hour trading platform, that's the resistance on the 4 hour. So 117.41, call it 117.40 for round numbers, is your resistance. Okay, your support really on the 1 hour is probably this 200 hour here at 170.95. Reen, I don't know when you got in, when that triggered, but best of luck, and always trail your stop loss, or I don't know how you place your stop loss, but certainly have a stop loss, my friend. So where are we? Here we come. The claims are coming across the wires in a minute or so. So let's just go back to a dollar pair. Let's look at the Aussie for a change. We looked at all the other majors. Let's look at let's have a look at the CAD, because the CAD's been moving quite well, and CAD will be in play tomorrow because the Canadians also have their jobs numbers tomorrow. And I'm saying look at the CAD, and I can't find the CAD here. Let me open a new file, a new chart. What am I looking for? New, insert, new, view, file, new chart. Dollar CAD. There it is there. So let's put that template on we've been using. Unless anybody wants to use a different template, let me know. These are trend following templates with fast and slow moving averages on it. So dollar CAD, so far dollars up on the strong ADP number. Over this dollar CAD, dollar CAD and what else. So it's a bit similar to the ones we've just been looking at, but again, another one that dipped down and dipped up. But if you've got the daily time frame, you can see it's really, really very weak. But interestingly, we are now starting to test the 20-day moving average for the first time in a long time. This is the daily on the dollar CAD. Obviously, we can't make a decision as an end of day trader on this chart because the candle isn't closed. So yesterday we closed down, so we're still short, or still weak under the 20-day. But really, 120.87 is the key level. Let me just put that on there because that's the 20-day moving average. And we've closed over that today. We certainly probably closed out this short because we've been, so you can, hopefully you can see that. See how the big move down has then petered out as we've come down to these record lows down here at 120.30, 120. We even went as low as 120 and 120.07, didn't we? Here earlier in the week, that was that low there. 120.08. So trend continues. We may be finding a floor here, but these are relatively record lows for dollar CAD. So looks like the data's across the boards again. It's better than expected again. So and across the board by the looks of things here, the 4-week average has come down as well. Right. So initial claims better than expected. 385,000. It was expected 400,000. It says 395 here on my calendar here, but 400,000 was the consensus in both Bloomberg and Reuters polls. So that's beat expectations again. So another new pandemic low for new claims, under 400,000. Quite significantly, 385,000. Last week's, interestingly, wasn't revised at all. In fact, at all, it stayed at 406. So that's still relatively positive. And the other key thing this time is the 4-week average has moved down again this time. We're down at 428k or 428,000 from 458,500 last time. So that's positive as well. So a bit of an impact on the long term, on the 4-week moving average. The longer term, let me just view that. Let me just put that on. The longer term unemployed data, let me just have a look at that, because that was the one that really shocked people or markets last week. Get close. I'll come to your idea with Euro in a minute. Let me just see the data here. Well, I've lost it. I've lost it in all the data that's come across. So the continuing claims, that was the one. And again, continuing claims have actually gone up. We were 3.6 million last week. It's been revised down quite significantly from 3.642. So that's positive. Expectations, though, were 3.615 million this time, and it's coming back above last week's, rounding down. It's coming at 3.77.1 million. So again, that's relatively negative, and that's going to take the shine off the positive data we had from ADP 15 minutes ago. So again, the long-term unemployed in the United States are sticky. They're sticking. They're not getting back into work. And again, it could have some reflection on what I was talking about before about the school year and people that were perhaps back in an employment when the kids were back at school. Now they're back at home. They're perhaps those temporary jobs have disappeared, or people that were working in the public sector in schools and around schools, supplying schools or whatever it was. That's all perhaps coming to an end. So 3.771 million long-term unemployment, the continuing claims. So that's relatively negative as well. So all in all, still positive data out of the United States today. But markets were probably hoping, or the bulls were certainly hoping for that to turn positive as well. But that hasn't been the case. Sorry, get close to what you were saying here. Euro 1 hour at the top of a bearish candle is where I have resistance line that hasn't been tested. Usually the markets like to visit. They certainly do, time and time again, my friends. I understand what you're doing. There's the 1 hour candle frame you've just been talking about. So continuing to move lower, 121.66. So your target still seems a long way away for a 1 hour plan, but it's been after that big spike here and rejection. It's not a shooting star because we're not at the bottom of a trend or anything, but it's moved up. That certainly ran out of any positive up move we might have had here at lunchtime, and then we've moved back down quite significantly on that data. So dollars getting a bid from the two sets of data we've had so far. As I say, we've got in another hour we've got the services PMI, and then in an hour and 45 we've got the more important ISM services PMIs as well, and crude inventories later on as well. So lots of data. That's been relatively dollar positive, the data so far. So let's take that off. So let's just go back. That's the euro moving back under this 121.17 cable. I'm moving back down as well, 141.55. And dollar yen must have got a bid. There we go. So we got a new weekly high here, 109.92. That high from this was from last week, wasn't it, when we went over 110 very briefly. But that's the next real line in the sand for dollar yen traders, and that trend continues to move up. So again, this one having been short here into the close last night, that would have taken you long this morning on this crossing moving average strategy there as the parabolic side, hour after parabolic star flipped. We were over the 20-hour moving average in the top half of the Bollinger Band. Now we've ran to the extreme of the Bollinger Band, retraced, support at 50-hour moving average. Now big positive rally as the news has come out, the positive dollar news has come out. So dollar positive so far, 109.94. And relatively, the yen is the weaker of the performers. I wonder how the Kiwi has performed, because the Kiwi's been weak. There we go. We're under What 72 now? We're under 72 quite significantly. So this has been the biggest mover for a day or two, or the last 2 days. The dollar against the Kiwi, and here we are now under 72, and we're trading at 171.86. So again, that one down retrace, and the last short was triggered this morning here on that cross there at 5 o'clock this morning server time, and here we are at 1500 hours server time, so 10 candles to the downside. May have closed out there and then got back in here on the close of that candle, and continues to unwind to the downside. Vincent, good afternoon to you, sir. Anything you want to talk about, Vincent? Anything you want to see on the charts? Let me know. That's what we're here for. Let me go and see if we got any visitors on our Facebook page. We don't seem to have any visitors on our Facebook page. Let me just refresh that. Nobody wants to talk to me on Facebook. Their protocol, their call. I understand. We're only here to help. People don't want to speak. I understand that. Lucy's spamming me about never depend on a single income. That's a fair comment. And that's all, really. Never mind. Such is life. Let's have a look. So we got, this is dollar yen. Is it dollar yen? No, it's the Kiwi moving down. I would guess the Aussie is also in a similar sort of time frame, suffering as well. Yeah, so it's a dollar bid day. Let me have a look at what the dollar index is doing. Where's my dollar index on here? Can't see it. We'll come back to that in a minute. And as far as the futures markets for currency, for equity markets, maybe have dipped a wee bit. There we go, dipped, bounced a wee bit in this hour, but they've been down this morning under 4,200. Again, let's just put that on there so you can see that 4,200 had been a level we'd held for most of the week, but we're significantly under it now. This is, again, on the 1 hour basis here. The big down candle was this morning as we moved. In fact, let's put that on here again. Trading the actual strategy there, you would have gone short here this morning at 10 o'clock. The big candle was the first we broke under 420, 12 till 1, and then the last hour or two, huge sell-off as the dollar's appreciated. We've moved down through, well, I'm saying huge sell-off relative to the, obviously, day, the time frame. Moved down quite significantly and then down again. We found a bit of a floor currently at 4176. We've spiked as low as 4171, so 4176, 4171 so far is the low today, and we've bounced off that a wee bit. MACD's turned lower. Stochastic's already overbought, but that's not a surprise. And ATR is about 6.5 points there, so nice move down for the US 500, the world's most important stock market. Reen, please, do you think gold will get to 1852 on 1 hour? Thank you, sir. Let's have a look. It will do at some point, but it's whether you're still in the trade. We'll get to 1952 as well at some point, but that could be hours away, could be days away. Who knows? Gold week on the 1 hour time frame, Reen. Again, let me just go back to that explanation. I said to get closer before. The average move over the last 14 hours for the gold market in a 1 hour time frame has been about $4. Okay, you can see this ATR here. I hope you can. 3.9697. So call it $4 for the sake of rounding up. Okay, so $4. So we're currently at 1886. So if your target is 1852, that's it's another $34 if I did the maths correctly there. That's quite a long move, isn't it, on the hourly time frame? So 1852, quite a fair way away. But how significant is that? Well, to get down to there, we need to break a key daily support and resistance level, which sits at 1875. Let me show you why I say that. So this is our daily time frame for gold. Your 1815, your 1852, where it was all the way down here somewhere. That's 1850. It's close enough to $2 here. I hope you. So that's quite a way down still, isn't it? But this is the daily again. But if we go to the weekly time, just bear with me a second here. If we go to the weekly time frame, actually, let me just put in the level I talked about and change the color so you can see it. So the level I'm talking about is 1875, which is around about here. I'll make that a yellow line. Just bear with me a second. So if I make that a big, thick yellow line that you can see, make it a thick one. Let's make it yellow and make it a thick one like that. Okay, close. Right, watch this one here. This is 1875. Okay, if we go look to the left, you can see it was a resistance area all the way back here in January. But if we go up again to the higher time frame, remember you're talking about the 1 hour time frame, so all the way up on the weekly time frame, that 1875 was a key resistance level. We've broken over that in the last couple of weeks, so that's now a relatively strong support level. So 1875 big support level before you get to your 1852. But anything's possible, Neem. It's just rather ambitious, I would say, if we're currently trading at 1885. But, here it's been short here on the 1 hour time frame. There, crossed the 509 cross there. We went under the midpoint of the Bollinger Band and into the underside of the Bollinger Band here this morning, 8 o'clock at whatever time that was or whatever price that was. That was around 1903, so we're still above the key 1900. Let's change that. Make that a thin line there. There we go. 1903 close, and that's just trended lower, hasn't it? We've ran all the way down to the 200 hour. Many people would have had a target there, but again, going back to using the ATR as setting your target. The ATR, what did we say it was? The average true range on the gold market is, what was it at that time? So at that time, it was actually probably less than that. It was $2.50. So we've already moved from 1903 all the way down to 1885. So we've got, what was that? I can't do the maths in my head here. 1903 to 1885. That's $18, isn't it? And if our ATR is only 2.5, we've got 8 times the hourly move already. So it's much way ahead of any normal target. But you could have trended that down to the 200 hour and then kept short simply because the moving average was still moving down. In the 1 hour time frame, those moving average, the angle on the moving average is a bit steep, so that would be a bit of a worry. And that's why we sort of stalled here at the 200 hour. But then we've gapped lower as dollars moved up, and the inflation story may be fading again with this dollar data that's coming in. Some would argue it's actually increasing. So it's as with ever in the markets and in analysis and in economics, it's all about to make your decision based on your assumptions, your analysis, and your trading approach. And we continue to unwind today, 1885, but certainly 1852, certainly ambitious, Reem, but certainly the best of luck, sir. Let me say, let's we go to a higher time frame. It will look less ambitious, clearly. But again, even on the end of day time frame, we'd need to break the 20-day moving average. We'd then move into the lower half of the Bollinger Band, and that would then bring in the 50-day moving average, which takes you down to 1829. I say on a 1 hour time frame, looks a very ambitious target, Reed, my friend. But thank you for asking, and best of luck. I hope I don't know when. Are you short currently? I can't remember what you said, but certainly it's here. As an end of day trader here on the gold market, if we look at this midline here on the Bollinger Band, it's been over this 20-day moving average. Tested it here at the end of April, beginning of May, but then rallied off as it broke over the 200-day moving average. And it first broke to the north, back into the upside of the Bollinger Band, right at the beginning of April. So the first trading day of April till now, the third, fourth trading day of June, we've been in the upper half of the Bollinger Band, trending higher above the 20-day moving average. And as you can see here, even these shorter time frame moving averages have all been moving up. Here it flattened out, and it looks like at the moment, if you zoom this up, you can see the 5-day is starting to roll over. Okay, but it's done that before and then moved back up. So at the moment, it's too early to tell, but it's looking like quite a weak day for gold today. Catchy is always good, I always say. So yeah, 1852. Bit of an ambitious target on the gold chart, but thank you for asking. Right, where are we? I don't think there's any more data coming immediately. We've got the central bank reserves from the Central Bank of Russia in about 15 minutes, but that's not really moved the dollar particularly. And it's all about the services from market and ISM and the oil, as I said, later to come. So let's have a quick recap. Euro down again, so it's a dollar bid in this hour after the strong data, 121.67. We've just pushed as low as 121.57. So that's a low for today. It's lower than Wednesday. It's lower than Tuesday. It's lower than Monday, but it's not as low as Friday. So Friday's low took us to 121.35 is the next level. I haven't got the pivot points or the support S1 or R1 or R2 or R3 on here, but we're certainly moving lower. Euro dollar. Sterling, cable, pound against the US dollar will be moving in the similar direction, but not as aggressively. So sterling remains okay. We're at 151.62, right? Just still in the upper half of that 141 to 142 channel we saw on the higher daily time frame, but right on the 200-hour moving average there, which has been flat since Tuesday, Wednesday, and now Thursday. So moving down. Today's low is still above yesterday's low. So sterling's had a strong couple of sessions. So there we go. Creation, hello. Good afternoon, good evening, good morning, wherever you are in the world. Anything you want to talk about? Any time frame, any asset? Please let us know. We'll have a look at it together. So sterling's down. Dollar yen continues to move higher. Still above. Currently still above yesterday's high, so a close above yesterday's resistance, which was around 109.85, will be positive for dollar yen. Yen remains weaker, so dollar getting a bit of a lift. Remember, we've been grinding higher over the last couple of days. The dollar. Actually, let's have a look at the dollar index. Have I got it here? I said I was going to have a look at it before, and I didn't open it. So let's have a new chart. Let's have a look at the dollar index, which is there. Again, we'll put it on the same time frame. It's not one that many people trade, but it's a great feel for how strong or weak the dollar is. So you can see this is the dollar index, and remember, it's created. It's a weighted index created from 6 key currencies. They're not all equally weighted. By far, the biggest weighting in the dollar index is the euro dollar, but it also includes cable, includes the yen, includes the Swiss franc, the Swedish crown, and the Canadian dollar. But the euro against the dollar is over 56% of the weighting of the dollar index. So anyway, dollar index on a 1 hour time frame, sort of looping high, as I say, been grinding higher over the last few days from this break of a real test low to 89.50. Again, let me just put some divisions on there. So here we are, Thursday, Wednesday, Tuesday, down here at 89.50, that low there, 89.62. So testing that 89.50 zone, but grinded up higher since then. Up yesterday, down into close, and up again today above yesterday's high so far today. Can we hold over there? We shall see. We're trading at 90.70, and we are moving higher. Andrew's just shown me a note about, have you seen copper? So let's have a look at copper. I would guess it's moved quite aggressively, has it? She's nodding her head, sat next to me here. So let's have a look. Copper had moved aggressively earlier in the week. So look, I'm looking for a file, new chart. And a lot of them, the PMIs will have helped. Let's put it on here. If we move up, so what we've had the stronger dollar over the last couple of hours, and you can see here key commodity. Remember, all commodities have been still on a bit of a tear, but here, just like we've seen with the gold going down, silver's been moving down, and copper, another key industrial metal, moving down. Copper isn't a precious metal like gold and silver. It's much more of an industrial metal. Beauty of silver, lots of people like trading silver. It's both deemed a precious and industrial metal as well. Copper is very much first and foremost an industrial metal, and a big demand from manufacturing areas like Asia and particularly China. So we've moved down. But if I look at the daily time frame, I'm sure that's still relatively well bid. Yeah, we stalled. It's had a nice old strong rally, copper, but sort of consolidating now here on the daily time frame. So here we got 467.50. And interestingly, also, again, we can't make any decisions on that, but what's the close of those 1, 2, 3, 4 days there for copper was at 449.95, so just at 4.450, and we're sort of currently trading below that. Go back down to the 1 hour time frame. Below that 4.45 at 4.85. So moving down. Is it just the strength of the dollar after all that data come out? We shall see. But again, another one, if you'd been trading this with this crossing strategy, it went under it looked like it was going to go up and immediately reversed. So that would have been a relatively strong short entry way back here. When was this? This was on the 1st of June here, around about 6 o'clock. Not strong because we haven't closed below that, but that would have been another entry there early on the 2nd of June. And it's just really started to unwind. Some big-ish candles, and then the last 3 hours have been huge candles moving down. So there we go. HD Creation. What's the best app for trading? Well, I would obviously say our Hot Forex app. So download the app. It's got all our analysis. It's got all the trading instruments you need, and we're here to help. Follow us on Facebook. Follow us on Twitter. We're here to help. Raja. I also do live stream on currency trading. Do you Psycho Forex trade? It's a great handle, that. Psycho Forex trading, very good. Best of luck, my friend. There's guys. There's lots and lots and lots of free advice out there. There's obviously lots of people trying to sell you stuff as well. So be careful with anything before you part any money. But take as much free stuff as you can. All our education, all our webinars, all our live broadcasts are all free. You don't need to have an account. You don't necessarily need to be logged in or whatever, but we're here to help, basically. More the merrier, in my view. So that was that gold question from Reem before, wasn't it? So there we go. Right, if there's no more questions, I'm going to call it a day because my voice is about to go. Let's go back to my Facebook friends, or not Facebook friends as it appears to be today. There's hardly anybody there for some reason. Let me just check. Let me just refresh that. Boom, 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 boom. No more comments on Facebook, so we'll call it a day. Let's just wrap up where we were with the data. So it was a significant, huge beat for the private payrolls number. But again, don't assume that's going to be a big necessarily a big beat for the NFP tomorrow. So 978,000 new payroll jobs in the private sector were created in the United States in April for the May number. 650,000 was expected, so it's a big, more than 50% beat. The weekly unemployment claims came in at 385,000, so it's yet another pandemic low of 385,000. It was expected around 400,000, so that's another significant beat. The 4 weekly average also moved down 30,000 to 428,000. But the one caveat remains, as we had last week, was the long-term unemployed, the continuing claims, as it's called, came in at 3.77 million, higher than expected. It was expected to be 3.615 million. And also the previous week's number was also revised down a wee bit, but not as much as expected again. So little negative number there, or obviously a big number, but a relatively negative number in all the positive data we've had today. So we've got a stronger dollar ahead of the US cash market open. We opened in 25 minutes. So stay safe, everyone. Trade carefully. And as I always say, may the pips be with you.